Todd, I haven't got to talk to you for a little while. I've been out for a week or so, but what do you make of this market action in the soybeans? Do you consider that to be a failure today, or technically, how do you relate to that?
Hi, Marlon. You know, I don't consider it much of anything. You know, we're in extremely low time, no action. There's no volume. There's no care. Now, if you look at it from this point of view, in the equity market, markets tend to drift higher when they're dull because there's always buyers coming in. In the commodity space, in the grain space, you've got farmers trying to sell and try to sneak out some. They see a little rally trying to get out. So markets tend to drift lower because that's a natural market the way that it works. You've got people that own inventory that are trying to liquidate when they see these little bit of rallies. So you see a tendency to drill down. This has been as painful as any torture you can imagine, the overall trade. We have light volume, mediocre things to do, and of course, if you look out on the floor, there's nobody here because there is no reason really to be here unless some big order or something major would happen, and we don't expect it over the holidays. This is typical between Christmas and New Year's trade. No volume, no action, no interest, unless something major would happen, which I don't foresee that. It'll be like this for the rest of the week.
Well, I was going to say, it sounded pretty quiet right behind you there. Didn't hear much going on. About the only thing that seemed to be somewhat exciting today, Todd, happened to be the crude oil market. And it was coming back with some pretty good gains earlier this morning. And I had to wonder if that was between that and the value of the dollar rallying here at mid-session. I wondered if that was really whipsawing this market around on the grains a little bit.
I don't know if we want to call it whipsawing, but certainly creating some additional pressure. But overall, Marlon, they've really beaten down the grains. You know, again, in my opinion, pretty much as far as they can go. Can they go a little bit lower? Yeah, absolutely. But I think we're at great levels here overall. I don't think this is the time to get involved again right before New Year's. I expect this kind of action. Crude popped a little bit today, but don't forget, yesterday it was down 130. So, you know, you're going back and forth, and really what you're having now is you're having a bunch of skeleton crude traders kind of exchanging money as they go around through the day, where there isn't really any tremendous action forcing any markets going in one direction, major or the other. I mean, the biggest excitement today is really in the wheat market, if you look at it.
And let's do just that. Sit tight there, Todd. We'll take a peek. March wheat in Chicago, 5 higher, 471.5, and now 471.75. In Kansas City, here we have the March contract trading 3 higher at 469. And just like Todd mentioned, we have new crop July up 2 1/4 at 489, so we're closer to the highs than we are the lows. On the Minneapolis spring wheat trade, here we have March trading 2 higher at 493 3/4. May is up 2 3/4 at 504. Keep in mind, I was mentioning earlier, we have some cold weather issues to be concerned about in Russia and Ukraine in that Black Sea region, so we'll keep an eye on that. In the cotton, as we head into the break, we have the March cotton now 17 points higher at 64.14. We're going to be back talking more with Todd Horwitz about livestock when we return right after this.